Manufacturing activity is under pressure. Absa's PMI for the sector is back to contractionary territory. The index declined to 43.6 in August. This is the fifth month in 2024 that the reading's been in contractionary territory. Absa says this underscores the challenges the sector faces amid ongoing political uncertainty, high but slowing inflation, elevated borrowing costs, and sluggish global and domestic demand. Bidvest has posted higher year-end profit. The industrial conglomerates delivered a near 7% rise in headline earnings as 5 of its 7 divisions reported profit growth. 2 units, namely commercial products and automotive, faced headwinds that was due to volume contractions in renewables and the new vehicles space. Bidvest says it expects to experience pressure in the first half of the year, partly due to that ongoing elevated renewable energy sales base, but it says travel and tourism industry remains upbeat, and with positive sentiment around growth in the medium to longer term, the firm expects market conditions to improve in all its operating territories. RCL Foods has resumed paying dividends following the unbundling of Rainbow. A total payout of 35 cents has been declared. That's from the 12 months to end of June. The food manufacturer says it delivered a pleasing set of results despite softer consumer demand. Group revenue from continuing operations increased by nearly 7%, mainly due to higher sales pricing. Headline earnings per share, meanwhile, jumped 31%. Looking ahead, RCL expects the economic environment to remain challenging for consumers and food producers. It says key downside risks included volatility in the rand-dollar exchange rate and commodity input costs remaining high. Weak PGM prices are weighing on Sibanye-Stillwater. The precious metals mining company expects to report a loss per share for its half year. It cited an impairment of 7.5 billion rand. Sibanye says that's mainly due to lower medium to long-term forecast palladium price assumptions, which resulted in a decline in expected future net cash flows. Sibanye has added that depressed PGM prices remain a significant challenge, and despite it seeing an operational improvement at its US PGM operations, it's assessing further action to address the cost structures of that unit. Sun International has forecast a profit bump. The gaming and hospitality group expects its interim headline earnings per share to register an increase of up to 12%. Sun says it's delivered a robust trading performance underpinned by the strength of its diversified operating model. It's added that Sunbet maintained its growth trajectory and exceeded its targets during the period, while resorts and hotels have achieved robust growth in income. Sun International is set to open its books next Monday. Sunlam Life is growing its portfolio. It's set to acquire 25% interest in African Rainbow Capital Financial Services Holdings. That firm is the investment holding company for all the financial services investments of Ubuntu Botho Investments, and Ubuntu Botho is Sunlam's strategic empowerment partner. Sunlam says this 2.4 billion rand deal is a natural extension of its interest in that company, and that Sunlam will continue to explore ways to collaborate strategically with the firm and its portfolio investments to enhance competition. Intel could be set for change. According to Reuters, efforts are underway to revive the chip maker's fortunes. Intel CEO and key executives are expected to present a plan to the company's board of directors, which aims to slice off unnecessary businesses and revamp capital spending. Here's more detail on that.
Intel could be headed for a big shake-up. A Reuters source says boss Pat Gelsinger will present a plan later this month to sell off businesses and revamp capital spending. It's thought the proposal will be put to a board meeting in mid-September. There was no comment on the report from the firm. However, Intel is under pressure to do something as it lags rivals on AI. Its market value has sunk below $100 billion following a disastrous second quarter earnings report last month. Meanwhile, rival Nvidia, seen as the big winner from the AI boom, has seen its value soar to $3 trillion. The source says Gelsinger's plan is likely to see capital spending slashed. That could drive Intel to scrap a $32 billion factory in Germany, a project that had already been delayed. However, it's thought he won't suggest selling off the company's contract chip manufacturing business. That has already been separated from its semiconductor design unit and reports results separately. Intel has reportedly retained Morgan Stanley and Goldman Sachs to advise on what assets it should get rid of. Programmable chip unit Altera, which it acquired in 2015, is seen among likely candidates for disposal. Intel has already announced plans to cut 15% of its workforce as part of cost-saving measures.